and welcome to the Siler Wealth Management video blog. And today we're going to talk about the stock market, but first let's talk about what happened over the weekend in Paris or late last week. Look, this is a tragedy, and I know everybody's gone on and on over the internet about it, so I'm not going to spend more time on it. However, what I am going to say that this is not, and I know people are probably thinking, how is this going to affect the stock market? Well, this is not a stock market problem. This is a people problem. So what I'm going to say is hopefully we get the right people out there that can make the right decisions to keep our borders, our allies' borders safe. And of course, because we know this is a very important election coming up in the next year or so. And I think that's critical at this point. But anyway, our thoughts go out to the folks in Paris. And you know what? For those of us who've been there, it's a great city. And, the way I look at things is that I'm surprised because of the lack of security in certain areas. I'm surprised things like this don't happen more often. So I think we have to credit the intelligence agencies and all the patrols and so forth and all law enforcement. So I think they do a great job, and you can only do what you can do. But hopefully, if we can put a little bit more money into those programs, we can keep our borders, our allies' borders safe. And you know what? I know I often criticize the French, but kudos to the French for going back out there and just bombing the absolute crap out of those strategic points in Syria. All right, kudos to them. I'm glad they did it, and they really stood up for their people. So let's talk about now the markets. Well, like I said, it's not really affecting the stock markets that much. You have, I hate to say this, but if that would have happened in the United States, the markets would have reacted a little bit differently. Not that Paris is one of the top 5 financial districts in the world, but I think we're getting a little bit numb to these type of things. Okay, 9/11 absolutely was the most catastrophic we've ever seen, and these smaller terrorist, and this is not a small one, but with those small terrorist acts, I think that we are a little bit numb to them. Although we hurt when we see them, numb to the fact that people aren't there panic selling. Okay, and they shouldn't be panic selling at this point. I just don't know the good in selling anything right now because we've already been in a little bit of a pullback. Before this happened late last week, our markets have pulled back. So let me give you some numbers. In late September, we bottomed out. We bottomed out as far as the low at 1871 on the S&P 500. I'm talking S&P because that is the broader market. That's the 500 largest stocks. We peaked out in October at 2116. That was a gain of 13%. Anytime you have a substantial gain in the market, and I wish I could show you charts, which I have my charts up here, and I'm not sure if you can see them, but right here is where the market bottomed. That's September, okay? I'm sorry. That's September. So what I look at here is anytime you have a rally, substantial like that in a short period of time, and that was 13% rally from peak to trough, the market's got to give back some of it. So normally you see about a third retracement. Anywhere from a third to a half doesn't technically, meaning on a technical part, meaning charts. When I say technical or technical analysis, that's chart reading. It's being a chartist, which is something that I have done for years, and I'm fairly good at it. So when you have a big run, you can give back a third to a half of that run and just basically digest the move. That's what we've been seeing. Now, this, because the markets are indicating lower this morning, this could give you that little boost lower to try and get you down to about half. And then usually you get to an oversold state, which typically brings on a buying opportunity. Okay, so let me just make sure you understand. An overbought state or extended, that means the markets are ahead of themselves. When we hit that peak in October, we kind of made a pretty big run in a short period of time. We were extended, we were overbought. That means there's too much excitement in the markets and just people buying because they wanted to own. Okay? When it gets down to that low, and that's oversold or just washed out, that's the big term that they use, but oversold state is pretty good. That means everybody that's sold pretty much that's going to sell has already sold. And that puts in a position where all we have left really are buyers. If there's not many more people selling there, then the buyers come in. So you have an overbought, oversold state. We are not quite oversold yet, but we are getting that direction. And I think that today may wash us down to that oversold state and create opportunity again. Because other than what happened in Paris, this past weekend, things haven't changed in the financial markets, in our country. Now, we don't know what the Fed's going to do. Now, will the Fed refrain from raising interest rates next month because of what's going on? Because, obviously it's an economic impact in Paris. So that's what we have to look at here. Bottom line is the markets are probably still okay. I don't think we don't see a bear market here. It's just a little bit of a pullback and an upward move. So there's opportunity out there, and I'm going back to my stock list that I like and finding the right opportunity. So if you guys have your portfolios, your 401ks, and need somebody to take a look at them, we can do that. We are doing free portfolio reviews, but please be patient. We're doing a lot of them. In the meantime, you learned some new terms today. Overbought condition. That means the stocks are ahead of themselves. Oversold condition. They probably are just a little bit too sold out. Nobody wants them. All right. And some people, when it's really, really washed out, they call that term capitulation. That means when nobody wants it and they threw in the towel and they say, I'm done with the stock market, or I'm done with the stock. Now, when I say capitulation or when I say overbought, oversold, that condition can be the broader market, the S&P 500, the Dow Jones. It could also be an individual stock. So that stock's oversold, that stock's overbought. Oh, the market's oversold, the market's overbought. Okay. So we'll probably see oil tick up a little bit today. Typically, when there's some bombings going on, we do see oil tick up. So we'll see how that affects the gas prices or price of oil. But anyway, in the meantime, we're going to talk more about college funds on Wednesday. We have a nice piece, Is College Worth It? So I will release that to you folks if you'd like to see it. But again, I'm Lee Seiler with Seiler Wealth Management. You know how to get a hold of me. You can do either Facebook messaging. You can email me, stockdr@stockdr.com. Our newsletter usually comes out Tuesday, so I'm giving the warning. It'll be out tomorrow. If those of you are not getting it in your inboxes, go to my website, stockdr.com or seilerwealth.com, two names, one place, and sign up for it, and you will get it in your inbox tomorrow. Okay? I hope everybody has a great day, and I will be back with you on Wednesday. Take care.